Hello and welcome to Building the Premier Accounting Firm. I'm your host, Roger Knecht, president of Universal Accounting Center, and I'm excited again to be with you today to share with you some insights that you need to consider as it relates to running a successful accounting business. As it relates to this, I have a guest on each and every week, and today's going to be a wonderful discussion with Matt Putra. He happens to be the founder and CEO of 8X. It's a financial operations company, e-commerce business that works with consumer brands. Basically, before launching 8X, Matt built and scaled multiple ventures in the consumer packaged goods and logistics sectors, giving him firsthand experience with financial and operational challenges that fast growing founders face. Today, he and his team actually help brands make smarter, data driven financial decisions, simplifying complex topics, optimizing costs, and driving profitability. Matt's passionate about the demystification of finance for founders and helping them turn their numbers into competitive advantages for themselves and their business. So, Matt, welcome to the show.
Thank you so much for having me. I'm so excited.
Yeah, this is going to be a wonderful conversation. So, just to give it some context, I'd love you to
Sure.
do a quick introduction as to what it was that brought you to 8X and starting the business.
Yeah, for sure. So I was CFO of a private equity group, and I was commuting roughly 3 hours a day. And then I missed dinners at home with my kids for like about 2 years while I was doing this. And then when COVID happened, I started working from home, and I was like, oh, this is what it's like to be around the family a lot. And I said, I cannot go back to the way things were. And so I told my firm, I said, hey, just when this is all over, I'm going to keep working from home. And they said, no, you're not. And I said, okay, sorry, I quit. So basically, that's when I decided to make the leap, and I started just to work with a few people outside of my desk. And from there to here, we're, 35 clients and 25 employees and all kind of stuff. Yeah.
One of the things that I really appreciate about your bio is how you spoke of focusing on data driven decision making. And I'd like to start there. What does that mean to you?
The biggest thing that means to me is and the way we use this in practice is all of our financial models are what we call driver based,
Okay.
meaning, and a lot of people will be familiar with this in this world where there's two options to make a model. One is you say, well, last year was 10 million, we're going to grow 20%. So this year is 12 million. That's not driver based. When we go 20%, we're going to say, well, our foot traffic is this, and the purchase rate is this, and the unit cost is this, and the rent is that, and you break everything down into drivers. And that's how we use data, because when you do that, you begin to see if the 20% makes sense. Does the emperor have clothes? So that's what I mean predominantly by driver data based.
I like that explanation because when working with forecasts and such, one of the things that I typically want to do is model out what those changes will look like. And
100%.
I cause those numbers to be correlated. So if I change something, it's going to impact something else in a positive or negative way. And so
Definitely.
there's all these correlations that are happening that obviously net to the bottom line, but more importantly, I'm able to see more of a causal relationship within the financial numbers. And so that's kind of how I'm interpreting what it is you're sharing.
That's an even better summary than I gave. Absolutely.
Good, good. All right. Well, there you go. So, with that context, let's answer this question. I
Sure.
think this is really a great place to start. What is the difference between a budget and a forecast?
Well, budgets are, for me, you're going to do a budget maybe once a year, sometimes twice. You'll do it if your year ends in December, you'll start in October and you'll work on the plan. And this is what we want our business to look like in 2026, for example. I'm in mid budget with many clients right now.
Yeah.
A forecast is the thing that you drop your budget into the first time, but we update it every month and sometimes multiple times a month if there's a lot going on. And that, is sort of our LER, latest estimated results. And it updates all the time. We will actually drop our drivers actualized into this forecast, and the budget begins to cease to exist within about 2 months because you begin to get a better idea of where things are going to go, and that's your forecast, even though you still want to try to hit your budget. You can't rely on that to make decisions necessarily. It's more or less maybe it's the hurdle for people to jump over, but not the path to get there.
Okay. So, if I'm understanding you correctly, the budget becomes something that you use, and say you were mentioning October, to forecast the future, but that budget's going to become very much fixed. Once it's
Yes.
established, you're going to enter that maybe into your accounting software. You're going to show those numbers as the
Yep.
budget we're working towards.
Yep.
But the forecast itself is going to be more malleable throughout the course of the year as you adapt it and change it to maybe adjust for, maybe we didn't achieve something in the first quarter and we've got to actually excel in the second quarter. So we've got to ramp it up and do better than budget in order to kind of catch up for the year. Is that kind of a good illustration of how the forecast is more malleable?
That's how I would think about it. Yep. And there are clients where, like I mentioned, usually it's once a month we do updates on, we rolling monthly updating on the
Uh-huh.
forecast. But there are some clients that are in a pinch and we'll update it weekly sometimes when
Wow.
they're in a tough time.
Wow, that is interesting. I've not seen one be that malleable, but that makes sense, because if you already know that things are changing, you've got to be able to pivot and change, and those changes need to be illustrated in forecast to maybe account for cash flow needs, maybe
Yes.
address maybe advertising needs that need to be ramped up in order to catch up on something. So yeah, I could see those changes being illustrated in that. One of the things that I think is very helpful in this part of the conversation is the importance of a budget. Why even do one? I mean, it's kind of like looking into that bowl, or
Yep.
that that crystal ball, to say what's the future going to be like, and none of us know. So why even go through the exercise?
Well, we've all heard the saying, I think it was the US president that said plans are nothing, or a general, plans are nothing, planning is everything. We've all heard that.
Uh-huh.
And the reason you make a plan and you fix it is, well, there's a few reasons. One is, especially if most of us are business owners, we all need to know how much profit we think we can make, right? And to do that, we're going, well, we think we can grow by this amount. We think we need this many staff to do it. We
Yeah.
think we need this much marketing to do it. And then we go, well, we should make X. So for me, typically I want to target 20% on an EBITDA basis for my own firm. 30 if we can. And we're aiming for 30 in a couple of years. Now, when you do that, it especially if you do it in advance of a year, it makes you sort of crystallize your assumptions and put them in a spreadsheet, and the drivers too, because when you build a budget, obviously you use the drivers. And so it begins to shape the way you think about growth. Let's say, for example, I want to grow 20%, but I didn't want to hire that many more people. Well, what if 20% means I need to hire more people than I thought? Well, what if I can't do that? What if I need HR, or I need a support to get the hiring done because I just don't have time? Or what if we then have more pods of people that we need to have? And then and then how many more computers am I going to need? And how much more in benefits am I going to pay? And so the budget helps you kind of manage that thinking of like, yes, I want to grow 20%, and I want to grow by 20%, and I want to be 20% profitable. The budget helps you crystallize that thinking into more of a plan. And so then you can say to your team, look, we're going to do this, and I need this resources, and I need these many laptops, and maybe I need a managed service provider now. And it helps you kind of crystallize that and give your team a roadmap. And what I tell them is, do not go and pre-commit all this stuff. Don't go buy all the computers today for what we think we're going to need. No, only if we hit these hurdles along the forecast path do you go and buy the computers and sign on the managed service provider and these kind of things. So that's, I mean, how I'd use the budget and how forecast and budget would interact.
I love it. Wonderful explanation of that. And I think it articulates very well why one's valuable. And I'm going to add to it here for a
Yeah,
moment. One of the things
please.
that I think is hugely important is beginning with the end in mind. If we can actually know what we're working towards, whether it's that net income, a revenue number, all these things, we know what we're trying to achieve. And if we can now put it
Yeah.
into a forecast, a budget, let's say, it enables us to now reverse engineer what it's going to take to make that possible. It taps into that creative space of the accounting mind, where we're able to now look at all the variables that are needed within the business. And one of the things that I think is very important here is, clearly you're starting with top line revenue, but what was the advertising dollar needed to get that? And you can look at your sales funnels and what's leading up to that revenue. Well, once you've got the revenue, what are the cost of goods associated with that? What's that gross profit margin that you're working with? From that, what are your payroll expenses as it relates to gross profit? I mean, all of these things. And what happens is you can then take this imaginary futuristic business
Yep.
working perfectly, and compare what you're doing to today to it and see, well, what's going to have to change between where we are now to then so that we can achieve ultimately what we're working towards. So that's the first thing. The second thing is so many businesses are involved with outside investors, whether it's a
Yep.
line of credit, a banker that's trying to justify a loan, it's venture capital, it's private equity. Well, all of them want to know, where are we going with this and what are we expecting to happen? And
Yep.
that's where you're going to define that return on investment or the ability to pay back that loan. And unless you can communicate what the future is going to bring, what you can sell as, here's why I'm optimistic about tomorrow. At the end of the day, I can see what you've done in the past, but I want to know, where do you think this is going from here? And what can I hold you accountable for? And so that budget enables that conversation to take place. So there's so many valuable things that come from that budget. And I'm going to end on the fact that as a business owner, isn't it nice to be motivated by what it is that you're working towards? Isn't it
Yep.
nice to know this is what I'm intending to accomplish? Well, I know where I am today, but I want to get excited about tomorrow. And that's one of the things that I can do to get excited about it, because I can see, oh my heavens, look at this empire that I'm building. This is exciting. And look at the
100%.
benefits that are going to come from it. So what would you add anything more to that?
Yeah, all I would say is, especially if you have external stakeholders that are going to look at your budget,
Uh-huh.
I'll be a bit tongue in cheek here and say that you always have a sandbag version of the budget that you send externally.
Yes, yes, yes.
Because with your investors or your bankers or whatever, you do want to make it easy to hit, and then you'll have an internal version for your team with bonuses and OTEs and things like that, where it's maybe a bit more of a stretch. And then you may even have one between you and the executive team that's somewhere in the middle, being like, we actually have to do this. And so typically I would say, in a business with external stakeholders, especially investors, there's often three budgets: one for the team, one for the executives, and one for externals.
Oh, I'm so glad that you pointed this out. I was actually burned by this. So I'm going to give you
Okay.
two things that
Yeah.
are relevant to this. This is years ago, had a budget that I submitted. It went well. Here's the thing that happened though. The president of the company at the time put in place an incentive for the department heads, actually for the entire company for that
Yeah.
matter. And what happened is he put together a winter Yellowstone snowmobiling excursion, if you will, that the people who could go were the ones
Pretty
that met
cool.
or exceeded budget. Okay,
Sure.
here's the thing. I I exceeded it on the revenue end. I didn't meet it on the net income end. And
Okay.
I was the driving force in the company as to it exceeding the goals for the business. But because I missed the net income number for the company or for my department, I
Yep.
did not go. I was the lion's share of the department or the company's success, but
Crazy.
because I was too ambitious, too optimistic regarding the net income number, I missed it. It was far better than the previous year. It had
Yep.
significant growth, but
Yep.
because I missed it, I didn't get to go. So here's why I bring this up. This is the second thing. One of the things that I think is so valuable about the budget is it's a great illustration as to how well the business owner knows their business. If the
Totally.
business owner can hit within, say, 5%, 10% their budget for the next year, it means they know well that business model. But when
True.
they do a budget and they miss it by 30%, 50%, it's a great indicator to say, how well do you really know the company you're running? And so the budget is a great way to assess the business owner's understanding of the business they're operating.
Well, and something you said, I agree with you, and something you said triggered a thought, which is
Okay.
you made a budget in a department which rolled up to an enterprise budget.
Yeah.
How and this is something I've always struggled with too, is how then do we make sure that no one else is sandbagging their budgets before you then double sandbag it for your externals as the CFO, right?
Uh-huh.
Because
Uh-huh.
this is what happens. Everybody wants to hit their bonuses, so they might sandbag and send you something. And so how have you managed that in the past?
Well, that was early in my career, and I learned very well there that being optimistic does not help me at all because I
Yeah,
didn't hit my goals. I
right.
hit the top line revenue, as I mentioned, but the net income I missed. And because I didn't hit that net income number, I lost a bonus. And one of the things that I
Of
think is
course.
very important to realize is the bonus was contingent upon the number I gave. So to your point about sandbagging, it would have been better for me to have not been so optimistic and be more realistic
Yeah.
and do this. So one of the things that he taught me, the president of the company at the time, is with the budget, he's looking not for what I think is possible. He wants me to base it on proven technologies. He wants
Mm,
me to base everything that I'm forecasting on known historical proofs. And
mhm.
that way, anything I test or do better next year, I benefit from. So what I had built into my forecast is I think this is going to be so much better. I think this is going to be so much better. And I had no proof. What he just wanted is a budget that was based on historical things that were proven. And then from there, I could do better than my forecast and shine. But I unfortunately hadn't learned that principle. And so I built in my forecast the lofty things that I thought I could achieve,
Yeah.
many of which I did. It was curious that I did do those things. That was nice, but I
Yeah.
missed in that ultimate thing of the net income, and that's where it bit me. So there you
Yeah.
go.
That makes sense. That's a
Yeah.
tough one.
All right. So the next thing I wanted to bring up is clearly in your world, you're dealing with financial management. And I wanted to understand when you look at financial management and you're trying to help a company scale up, what are some of those things that you find are important? For example, a lot of times people find cash flow as being a pitfall and something that they struggle with, especially with rapid growth. What would you say to that?
Yeah, cash is always something you have to manage tightly. I would say the big thing with scale up is two really big things is your lifetime value of the customers or clients you acquire
Yeah.
and the payback time frame of the cost to acquire.
Okay.
Those two are huge. And if you can optimize those two things, you can grow and be profitable. But those are really big ones. So if you think about a service firm, there are costs to acquire. Some of us do marketing, some of us do just kind of outreach and whatever else. But there's still a cost. And so you have to understand what is your if you for those of us who have MRR, what is your monthly average revenue and then monthly gross margin and how fast do we pay off the cost to acquire? Because if it takes too long, and let's say in the worst case scenario, they've churned before they've paid off their acquisition cost, you're gonna die fairly
Yeah.
quickly, right? But if it's so let's say midterm, you may have to make sure your retention is very, very, very good. If it's a longer payback, 3 to 6 months. But
Okay.
if it's 1 month, if they pay themselves back in the first month, well, then they are then financing acquisition for every other client that you're going to acquire, right? So that's a really big one. And whether you're in service or whether you're in consumer packaged goods or fast moving consumer goods, this is one of the biggest things that people need to watch out for is these two things. Um, and of course, cash flow, right?
Yeah.
So we run a 13-week cash model for most of our clients. We run a 13-week cash model for ourselves, and we're testing it all the time. Like, I want to buy a new computer, put it in the cash model. What does it say? I want to hire this person, or there's a bonus end of quarter coming up. Okay, run that. Let me know because I need the peace of mind to have some idea of what my cash looks like as a business owner, and my clients do too. And so, I would say that's predominantly where we provide our value in ROI is this peace of mind for people where they know if they make a decision what the cash impact and profit impact is. So I would say, cash, CAC, LTV, or customer acquisition cost. Those are the biggest ones, to be honest.
Very good. Now, when it comes to these numbers, one of the things that I think is important is KPIs, scorecards, dashboarding. One, can you describe the difference between key performance indicators, scorecards, dashboards, and then more importantly, the use of each?
Okay, so we may use them differently than some, and I
Uh-huh.
think my background on this comes from EOS, Entrepreneur's Operating System, a little bit. So here's how we do it. What
Okay.
I tell people is that they must always have scorecards. They must not always have dashboards and KPIs.
Okay.
And even people that start up, I tell them to make good scorecards before they even get their financials in order, right? Because that takes more time. So here's why. A scorecard, the way that we use them, you're going to have for each department and for the executive team and teams, whatever, 5 to 15 of the most important metrics that are in your business and a target. That target is the minimum acceptable value for that metric. Let's say it's your cash balance. So the cash balance for me that keeps me peace of mind is 3 months OPEX. So that is a number, right? So then someone's responsible to fill that scorecard in every week. And if they fill it in and it's below my number, it turns red in that cell. If something turns red, we must solve that problem. And so you'll have a scorecard, cash balance, you'll have a acquisition payback timeline, you'll have a 3-month LTV, you'll have average ad spend per week, let's say, you'll have a number of things that are very important. And if they're off target, they turn red. When they turn red, they must be solved. The beautiful thing about scorecards is that anybody at any level of any intelligence, in any role, any seniority, can look at a scorecard and know what's wrong. Why? Because if it's red, I must fix. If it's green, I can ignore.
Yeah.
And so scorecards are so useful for anybody at any level. And I have found in my own business and in clients' businesses as well, when we deploy scorecards and the executive team adopts them, problem solving increases. The team shares the load with the executives because they can see when there's a problem and they know they must fix it. So again, you have a metric, you have a target, minimum acceptable value, you have an owner. If it turns red, the owner must fix. If it's green, the owner can ignore. So it's so simple. So we always want everyone to have scorecards.
You know,
When
I
you go
I
ahead.
do appreciate you pointing this out because otherwise they experience what I refer to as information overload. It's just so much data and information out there. So the scorecard is intended to simplify that. But you're going
Yes.
to say something else.
Yeah, well, I was just going to move on to KPIs and dashboards.
Okay.
We believe in those too, and we have other things that we look at too. But KPIs and dashboards are typically only effectively used by the smartest people in your business, not everyone. And so you may have a lot of smart people. Most people have some mix. Um, and I just have found that people don't use KPIs and dashboards regularly, consistently, and effectively over time, but they do use scorecards because a dashboard is open to interpretation. KPIs are useful, but the way that we use KPIs is sort of like on the stretch side of things. So, and because it's on the stretch side of things, it's like red or green throughout the year, but the scorecard must never be red, right? So when you look at a KPI sort of indicator thing, you might say, oh, it's how much red is too much? Well, that's open to interpretation too. The scorecard is any red is too much. So
Yeah.
fix it right now, right? And so we deploy more scorecards than we do dashboards at this point.
So when you're looking at the KPIs, the scorecard, is there a go-to number that you typically find yourself using quite often?
I would say I always have cash balance.
Cash
I
balance. Okay.
I always have a marketing efficiency ratio of some sort. So revenue or divided by marketing activity spend.
Okay.
I always have those. Um, I typically will have a gross margin if you can get it weekly. If you can't get it weekly, we ignore it on a weekly basis. Um, from there, I think it's heavily customizable. But again, in this day and age, there's a thought experiment you should use. I'll give it to you very quickly.
Please.
So imagine you're on a tropical island and there's no cell service or Wi-Fi, or there's really no ability to contact the outside world,
Okay.
except for every 4 weeks, a boat shows up with mail. And every 4 weeks, all you get is a letter, and all that's on that letter is 5 to 15 metrics, and they're red or they're green. The boat shows up today, you open your letter, and you have to decide whether you get on that boat and go home or you stay in the island for 4 more weeks. What are the 5 to 15 things that are on your letter for you? That is where you start with a scorecard, and you will evolve from there. But
I love that. You've got actually a little bit more information on the scorecard than I usually have. I usually limit it down to about 5. So you're a little bit more generous than I am, but I
sure.
love the analogy of the boat and so forth. That's perfect. That is
Mhm.
absolutely
I
perfect. All
didn't
right.
create it. I was taught to me by someone named Jason Green. Yeah.
Ah, very good. Well, I like that. You mentioned one of your go-to numbers being the cash flow. Just a quick story on that. This is years ago. We were dealing with some cash flow issues, and it's stressful, obviously. I mean, clearly
Yeah.
there's obligations that are needing to be taken care of, and the cash is what's needed to do so. So cash flow was a problem. And
Mhm.
I I just basically said, look, I've got to find a way that I can only stress about this if I have to stress about it. I
Yeah.
can't look every day at the number and begin with this anticipation of, is it good or bad? So I went to my accountant and I said, if it's below this threshold, I want you to tell me. If it's above this threshold, even by $1, I don't want to know about it.
Yeah.
And so it allowed me to remove myself from the anxiety of having to look, even just look at it. And so I
Amazing.
delegated that to someone else. They watched it, they managed it, and only once it got below a certain number did I have to get engaged.
Amazing.
And that was huge for me. It was a great relief. So it's a scorecard. It's obviously it's green or red, but I wanted to be removed enough from it so I could focus on the essentials of the business and get us out of the situation we were in. And I didn't want this thing kind of like as a light flashing on and off and all this. So I delegated it. And so that was something that was very
Cool.
helpful for me in that situation. All right. So another thing I wanted to talk about, and this was a conversation we were just beginning before the show was
Yeah.
started, is AI. Clearly, you know quite a bit about AI, and it's impacting our businesses, and many of us, it's something that could really impact us here in the short term, in the
Mhm.
next, say, year or two or three. And I was just curious, from an accounting perspective, what are you noticing about AI, and what are your thoughts about it?
Well, I'll start with my thoughts and then I'll say what I'm noticing.
Okay.
My thoughts are that for those of us who are professional service providers, I feel that if we're not in the call it the top 10% of AI adopters, we're going to be left behind fairly quickly. And furthermore, if we're in the bottom 10%, if I was in the bottom 10%, I don't think I would have a business that works next year.
Okay.
And that's because if people can do what I do with a third the people because they have AI employees, that they will then take work or they will acquire customers for more money or they'll take work for less money and I'll just be priced out very, very quickly. Um, Furthermore, with the Hire Act that's happening in the US, it's not been adopted by Congress and Senate's trying to block it and things. But if they adopt that, there'll be a 25% surcharge on any payments to foreign employees and sometimes foreign companies. Furthermore, they won't allow you to write off the costs. So it's like a double whammy. And so then we're all just going to suffer from profit margin and degradation. So AI is non-negotiable. In 10 years, some people think we'll be on UBI completely, but in that
Yeah.
time frame, a lot of people don't think you have a lot of time to make money left. And so if you don't figure this out, the money you will make will be less, and eventually you'll just run out of time to make money at all. And so just get started. And then on the positive side, it just makes life a lot easier. We have an AI sales coach in my company where every sales call that someone gets off of in my company, the sales coach sends us an instant message. Hey, your script adherence was a 6 out of 10. Here's how you could do better. Any questions? And you can ask it questions about how you could do better. Um, and then it logs our script compliance score in a dashboard for us. You can also ask it, oh man, I had a conversation with this guy. He said this. What should I say back? It'll tell you what to say back. So that you would be paying a whole person for that
Yes.
even 6 months ago, right? And now I don't have to because I've created an AI personality that can do our coaching, and it's actually really good. He was a little angry with me today, to be honest, but it's really good. And so there are positives where you can get more done, get it done faster, and this person is always available to you. Person is always available to you. So I have found a lot of value in this work.
So I appreciate not only your perspective, I agree with you. You brought up the UBI. There's a lot of talk about that
Yeah,
here in the coming maybe decade or so, that a
yeah.
lot of people need to become familiar with what that might look like as it relates to the utilization of AI. I have to
Mhm.
agree. If you're not using it, you will be replaced by someone who is using it. It's not necessarily that the AI is replacing you, it's that the individual who's using the tool will replace you. The
Yeah,
carpenter who was only using the hammer and no longer went to the nail gun and so forth,
right.
guess what? They've been replaced. That carpenter,
Exactly.
even though they might have been a phenomenal carpenter, the skill was replaced by the efficiency of that air compressor gun, that nail gun, that they were able to do so much better. So, if you're still using a handsaw and not using a skill saw, you're too slow. And so we have to equate that to the accounting profession. The third thing that you were pointing out is as it relates to the Hire Act. clearly there's going to be possibly an encouragement to bring things back on shore. Well, that's not to actually help with employment. It's intended to. What it's going to cause is if I can't afford or use the offshore person, I'm going to replace it with an AI. It's not
Yes.
going to be that I'm going to hire another person here onshore. So I think it's going to push people to the AI. And then the last thing I'd mention is regarding the let's say the application of it. You pointed out how you've got this sales coach. Same thing. We have an individual that literally just a week ago is no longer doing human assessments of various things that we have within the
Right.
company. That quality assurance is going to be done by an AI moving forward.
Amazing.
I've got AI integration within my business where I'm utilizing things, and in some instances, it's replaced roles of individuals.
Totally.
In other instances, it's accelerated or made more efficient various
Yes.
things that are going on. And so, in either case, it's a win win for the business. So, I love what you brought up. I think those things are very important to understand as it relates to AI. And for accounting professionals, we need to see its application for us. And the most obvious place for it is in the software applications that we're already paying for and using, those
Yep.
platforms, that tech stack that we're using. I would dare say the majority, if not 100% of them, are all working to see how AI can be integrated into the platforms you're already using. And all of a sudden, what you're going to find is you're naturally, just through the systems you're already paying for and using today, going to be using AI directly or indirectly anyway. Anything you would add to that?
Yeah, I would just say when the trouble with AI is knowing what to do next, because when you think you can do literally anything, it's actually very hard to pick something and make something.
Mhm.
So the way that I've approached it is, what is something that irritates me, and let me use that first. What irritates me the most? I can't do, or for example, when someone gets off a sales call, I have to go download the transcript myself and put it into ChatGPT and get the coaching. Well, I fixed it with the agent, right? Or another one was, I keep having to ask my sales team how many leads we got this week. Well, great. I made an AI agent yesterday morning, and it can read all of my CRM, and it can read all of my Stripe data. And so any question I ask it in those two things, it has pre-built tools that can just go and answer questions. How many leads, what the MRR, all these different things, right? So I always approach it with, what is not something additive to my business, but what's something that would just make me happier every day? And
Nice.
start, if you start there, you'll then find yourself building onwards from there.
That is excellent advice. I appreciate that. Typically, the way I respond is rather than looking at something that you're not doing,
Yes.
look at the things you're doing
Yes.
now and how to simplify those. I
Yes.
think a lot of times the shiny objects are, wouldn't it be nice too? Well, why are you
Yes.
worried about what you're able to do or could do? Well, let's focus on what you're already doing and simplifying that. So
100%.
yeah.
Yep.
All right. Next thing is regarding founders. I know a lot of times when working with business owners, they can become very overwhelmed and frustrated with
Hmm.
the complexities as it relates to growing their businesses, especially
Hmm.
when it comes to finance. I was wondering if you had any advice with the background and experience that you have.
Yeah. Um, so I assume a bunch of our listeners are service providers, and maybe
Mhm.
on the consulting side too. Is that right? Or is it
Yeah.
mainly?
Yeah.
Yeah.
Many of them are in that CFO advisory space as well.
Okay. So the the main thing about that is understanding what you're really selling to somebody. So if you're a bookkeeper, you're not selling debits and credits and whatever. You're selling sort of a peace of mind that they understand how the business is doing today. That's
Mhm.
what you're selling to them. If you're a CFO, you're selling sort of a feeling of confidence that they can take on the future and get to where they want to go in their goals. If you're a tax person, you're selling, again, not a tax return, not a filing. You're selling maybe a comfort where they know that they've minimized their tax or something. I don't do tax, so I'm less familiar with that. So first understand what you're selling, then sell that all the time. So when we get on the phone with our clients, we would typically working on their confidence every time we speak to them. So someone calls and they say, "Oh man, I'm in trouble. Cash flow." I'm like, "Okay, great. Well, let's model the three scenarios that make sense, and let's make a plan, because your reality is maybe not any one of those scenarios, but it's in between the three somewhere, and that will help us make decisions." And I'm calm, and I use language where I'm like, "Yes, this is stressful today, but let's make a plan to get through it, um, and we can do A, B, C, whatever, even D, whatever, right?" And so uh, definitely when you're on the CFO consulting side, you recognize that your role is one part therapist, one part financial strategist, right? You just have to be available to them to calm their worries. On the bookkeeping side, again, founders, they just need to know how the business is doing so they can make decisions. And so that's what you're really selling. And so for me, I think we train our team. We don't sell financial models. We do not sell cash flow forecasts. We do not sell scorecards. We sell peace of mind and confidence. And so our whole team knows that.
Very nice. I like that. That's one of the things that I think is very important. It's bringing it back to the emotional component, because so much of what they're doing can be overwhelming and stressful. And
Yes,
it's nice to think that as accounting professionals, we can address and perhaps eliminate
we
much
can.
of that. So that's very good. Matt, what are you grateful for?
What am I grateful for? Oh my gosh.
Yeah.
I right now I have a wonderful family. I have 4 kids, 11-year-old boy, 10-year-old boy, 8-year-old girl, 4-year-old boy, and my wife is amazing. And this morning I'm just very grateful for them, and they're just sweet and crazy and silly, but like it's just the biggest blessing of my entire life.
I love that. Regarding starting the business, going out as you did, you made some big decisions back then, quitting the position at that time to
Yeah.
start 8X. I'm curious, what of the support that your wife provided do you feel enabled you to move forward with confidence?
Oh my god, I would not be here without her at all. She is as crazy and she's a risk taker like I am in her own way. And when I said to her, I want to quit and I want to do my own thing, she was like, "Yep, great." And I said, "There's a chance this won't work." She's like, "We'll move to Bali for a year and recover and come back." And I'm like, she was just open for anything, and to know that I was allowed to take the risks that I would need to take to make something successful. We're still working on it, but um, I just knew that she was maybe not okay with it, but kind of okay with taking those risks. And for me, that was huge. And as you know, like early businesses, you sometimes have to work a crazy amount.
Uh-huh.
And her communication with our kids was always, "Dad loves you. He's missing this thing, but he's working on it so that we can do this," or he's working hard for us. And so her communication with our kids has been really important, just because they know that, you know, you could say, "Well, dad doesn't care. He's working all the time." No, never happened. So her support has been, I don't know, the reason we're here today, I think.
Beautiful. One of the things that I found in so many of the interviews I've done, behind every successful person is a cheerleader. There's someone there that
100%.
supports them and basically comforts them in knowing, you've got this, you can do this. I believe in you. And that's very important.
100%.
Last question is regarding your kids. What do you hope that they're learning as they witness you going out there, starting a successful business as you have, and being an entrepreneur as you are?
I have an answer for this because we think about it a lot, and I want them to be what's called divergent thinkers.
Mm.
So there's that classic sort of divergent thinking experiment where you ask someone how many uses are there for a paperclip, and the average person will think of, let's say, 10, but a true divergent thinker can think of 100. Why? Well, they
Wow.
change. Is this a 8-foot paperclip? Is it a float? Does this paperclip float? Is it, and so they change the paperclip, and so they come up with even more uses than everyone else. And so my kids, I work with them a lot on trying to think out of the box.
Yeah.
And I think it's beginning to happen. I got to see it with my son in action. He's in grade 6, and so they were doing this team building thing, and he came up with all these weird ideas to get this event done, and it was really cool to watch.
That is beautiful. I
Yeah,
love that idea of becoming a divergent thinker. That is excellent. Sometimes we put ourselves in a box and limit our abilities, and
totally.
it's thinking outside of the box where the possibilities become so obvious and emerge. So that's great. Here's what I'm going to do. I'm going to start wrapping this up, and I'm going to come back to you for a closing thought. As I go to do this, I do want to point out that there's an offer for our listeners, and it's essentially Matt has been very generous to offer his email address and basically his time. He's basically saying if you'd like to discuss with him
Yep.
more, a little bit more about his business and more importantly, AI regarding AI and its implementation and perhaps application in your business and how you can use AI to be more efficient and improve your profitability, I invite you to take an opportunity here and reach out to Matt. In the episode description, you'll find his email address, and there you can actually reach out and speak with him. Another way you could perhaps do this is also connect with him on LinkedIn, and through a direct messaging or mentioning this podcast, you could communicate with him that way as well. So definitely encourage you to take advantage of that and see what you could use to basically optimize AI as an application within your business. Now, that being said, I also want to invite you to take part in the Accountrepreneurs Challenge. The Accountrepreneurs Challenge is a challenge that we're offering here at Universal Accounting. It's for owners of accounting, bookkeeping, tax businesses to work on themselves and their companies. It's both personal and professional. It's where we're going to talk about time management as well as your business plan. It's a 90-day challenge that we're going to actually implement with you so that each week you have a specific activity that may take 15 minutes, may take maybe an hour, but it enables you to step away from that day-to-day routine and work on yourself and your business so that you can, in fact, have the premier accounting firm in your area. So I invite you to go to universalaccounting.com, and at universalaccounting.com, go to the free resource section, and in the free resource section, find the Accountrepreneurs Challenge, and there take advantage of this wonderful opportunity, and it is free. Now, in addition to that, as I just mentioned, go to universalaccountingcenter.com. And at Universal Accounting, you can actually find the various things that we have mentioned here on the show each and every week. At universalaccounting.com, you've first of all got those free resources I stated, but we also have the podcast highlights. There in the navigation, you can find the podcast. These happen to be past episodes that we've compiled into playlists that you can go binge listen to. These are actually organized in topical things that are relevant to your current situation, whether it's pricing, marketing, mental health, tech stacks for the firm, those things that you need to consider as you're running your business. Go listen to the experts and see what they have to say. Again, go to universalaccounting.com, and in the navigation, go to the podcast section, and you'll find the highlights with the playlist for you to binge in. The last thing I want to do is invite you to GrowCon. GrowCon happens to be an annual conference that we have for owners of bookkeeping, accounting, and tax businesses. It's here where we hear from the experts from the stage, seeing what it is we can be doing to work on our business. We likewise get to interact with our peers, those individuals that are like-minded, friends of ours that you can actually make as acquaintances, but more often collaborate with as well. These connections can be ones that you'll actually build as friendships for a lifetime. So I invite you to come and basically find those other individuals that are just like you. And then lastly, obviously, I'd like to meet you myself and have you meet my team, those individuals who are committed to be in business with you so that you can be in business for yourself, but not by yourself with Universal Accounting. So check it out there. If you're interested in more information as it relates to the conversations we have here on the show, you can go to universalaccountingschool.com. There we have a great deal of programs designed to help you work on your business and develop the skills you need to provide these quality services to your clients, whether it be becoming a professional bookkeeper, professional tax preparer, a profit and growth expert, and so many more. Go to universalaccountingschool.com and see what programs are available to help you build your premier accounting firm. If you'd also like to discuss with my staff those things that are related here to the show, feel free to also give us a phone call. You can contact us at 801-265-3777. And if you haven't already, obviously subscribe to the podcast. That being said, have a beautiful day and be safe. Matt, that was wonderful.
Cool.
Thanks for doing this. Yeah, I enjoyed it as well. So here's what I'm going to have you do now. I'm going to have you record that promo piece that I just mentioned.
Okay, sounds good. Let me know. Should I just say it right now?
Yep.
Okay, let's look at that. Okay, great. Hey, everybody, this is Matt. It was absolutely awesome. Hey, let me start again. Sorry, I'm going to record an episode. My memory, right? Hey, this is Matt. It was absolutely awesome to hang out with Roger today and record an episode of Building the Premier Accounting Firm. We talked about how to help your clients kind of get over the hurdles of startup growth. We talked a bit about AI. We talked about internal process. And look, I really invite you to join us. Shall we do that again?
You can do it again if you'd like, but you're good.
Okay. All right. If that was good, then good.
Yeah, you're good. So